Hello everyone, Clifford Bennett, Chief Economist, ACY Securities. I hope you're having a good day. It's a very exciting day because we've got US headline inflation coming out today, but watch for that core aspect to that inflation number, as I've been warning on for some time. Equity markets can rally on the day on the back of this CPI inflation number because they'll again go into a spasm of euphoria that this means the Fed will stop hiking. Well, no, it won't. It's all about that core number, and if that core number remains elevated, and remember, as I've been highlighting several times now, the core number has stayed high, not corrected, and that is the Federal Reserve's number one concern at this stage. Meanwhile, yesterday in the United States, we did see some other interesting data coming out, which tells us a lot about really the state of the mind of America. So we had the NFIB Optimism, Small Business Optimism Index, and that was at a 7-month high. Fantastic, right? They were certainly the headlines. The only problem is this 7-month high is just in the range that it's been in, this index, Optimism Index, which is a state of severe depression for quite some time now. And in fact, we're continuing to oscillate in a relatively narrow band around an area that is far more dire than during lockdowns. So people, the small business people of America, are more pessimistic now than they were, and depressed, I think is fair to say, than they were even in the midst of the COVID lockdowns. So that's really saying something, and akin to the lowest levels of the GFC crisis. So not really something to celebrate. I suppose, slight less disaster is a good thing somehow. Meanwhile, the IBD TIPP index of optimism of Americans generally, so that's all Americans, that too fell. From around 41.7, I think it was, to 41.3, but the market was expecting, bizarrely, this is what I keep saying, the detachment of Wall Street ivory tower economists from what's really going on in Main Street America. Wall Street economists actually predicted this index would leap higher to over 45 from 41.7 thereabouts, and fell to another low. So Americans are very worried. In fact, the sub-index has said they do not expect their personal conditions to be improving at all over the next 6 months. And they remain very, very pessimistic. In fact, I think it's near all-time historical lows how Americans in general perceive their federal authorities and the management of the economy. Absolutely terrible. It's around 38. Or even 36, somewhere around that level. It's very, very low. So Americans have no confidence at all in the ability of the Federal Reserve and federal regulators to successfully manage this economic situation, and they do not see any improvement in their own economic conditions going forward for quite some time. This tells you what is really going on in in Main Street America, which is reality, the realization that things are very bad. Now, I don't like mentioning this statistic, but it's so outlandish and striking. So warning alert here on this one. The number one cause of death in the United States for both men and women between 18 and 45, people in the prime of their life, is no longer as it once was. Heart attacks first, cancer second, occasionally cancer first, heart attack second. It's now drug overdose. This is how depressed the American society in general is. This is how dysfunctional the society is. This highlights the separation, I call it the breaking in two of the United States, between those who are rich and still getting richer, and the middle class that's shrinking violently, and the working class who are now seeing the wealth gap grow, not because the rich are getting faster, because they themselves are actually getting poorer. And these indexes that we've seen in the last couple of days for small business, which is the very real world end of the American economy, and for Americans in general, tells us this is not a good situation that America is in at the moment. And the fact that the administration and Wall Street keep talking about a strong US economy means there are no rescue policies on the way for the current predicament of the US society and economy. And this is why I really am bearish, or these things are happening for the same reasons that I am bearish. There has been massive overspending, mismanagement of the economy, a roller coaster created through having too low interest rates for too long, all sorts of problems, and they're all now bubbling to the surface and manifesting across the United States. And we're even seeing it hit corporate America with extremely large layoffs. So these layoffs wouldn't happen if these corporations thought things were going to pick up even within the next 18 months. They would keep their staff. The fact that they're laying off large numbers of staff, they do not see corporate America, does not itself see quietly behind closed doors, does not itself see any recovery in the US economy for at least 18 months. My view is we have a 1 to 3 year downturn for the United States economy, and I hope that isn't overly optimistic. In this environment, headline inflation can trigger, if it falls further, a further rally in equities. But markets are rallying now purely on hope of an economic recovery that simply isn't happening and isn't going to happen for quite some time. And when that reality hits home with the major money managers, the equity markets will again turn lower. Do be cautious with your investment portfolio. Do be active with managing it. Thanks very much. Clifford Bennett, Chief Economist, ACY Securities.